Good evening, ladies and gentlemen. Welcome back to Stocks to Buy Live, where today I kind of want to talk about where I'm going, where this channel is going to be in the future as we look at my portfolio. And I kind of want to break down the end game of this will eventually be mostly a dividend-oriented portfolio made up of ETFs, as I largely speculate on some individual stocks to try and get myself fast-tracked to where I want to be on this financial independence to perhaps one day retire early journey. So the scope of this video in the latter half, we're going to talk about some of these stocks, some of my goals, where I hope to be in the next year or two, especially the outlook for this channel specifically, because I'm not going to be doing this the way I'm doing it today in this full transparent manner since I started this channel back in 2019. And in fact, I keep thinking about where I want to be because this becomes quite exhausting over time. But what doesn't become exhausting, it becomes mentally straining more or less, is the insane media output that we have today that would literally drive you nuts if you try and base anything on an investment thesis today. Like, it's an absolute crapshoot. And I mean, even the speculators out there like Dumb Money, many people I follow, they're mostly sidelining. They're really pulling back on speculating. And here we sit as Canadians facing an election cycle that the US just went through. And I will tell you, as somebody that is like tries to independently think about this, and as somebody that grew up with a lot of stoners and a lot of people that had probably an an unhealthy level of skepticism around politicians and anybody in power, I really feel like that the level of healthy skepticism is gone, and people have thoroughly picked one side or another because, let's be clear, nobody really cares about the NDP or the Quebecois. Everybody really only cares about conservatives and liberals, and I got to hear about it at every turn. Family, work, you name it. And I'm kind of at a point right now where after watching this debate, like, I couldn't get the information that I wanted. I really didn't want to sit there and read these 60-page articles these guys were sending out. I really just wanted to listen to them, get a feel for who they were, but it was hard because I understand why nobody votes for the Quebecois, because the guy doesn't shut up and he interrupts everybody when they're trying to give their explanation of things. So this was like the worst debate I've ever seen. Hated it. And I'm kind of at the point right now where I just want to vote in the external party of what these people are shoving down my throat just to see them lose so I can laugh at them later, because I really don't care. These people don't show up to my job. They're not building our communities. They're not going to fix the housing problem. Ooh, you're going to save taxes by 80 grand. Ooh, that's a big deal on $1 million property, guys. That really helps everyone out. I mean, they can just move a few policies here and there, and that's about it. They're not really building the communities, right? Like, they're not going to put food on your table for you. I mean, to some extent, if you want those, the little bit of bonuses, I mean, these guys can give you, go for it. But I've never thought in that manner. I never try and rely on the government for my financial independence. So we'll see how this goes. It's going to be a crapshoot, guys. I hope you're ready to vote. In other terms, though, a lot of you have been pointing out too that the market is not bottoming. Wait until the hard economic data comes and, showing the U.S. has entered a recession. The problem I have with this way of thinking is 9 times out of 10, the market typically bottoms before we actually know we're in a recession, because you don't get the data until like another quarter out. And on top of that, I mean, more than 60% of CEOs right now expect a recession in the next 6 months as tariff turmoil continues to grow, according to surveys. And, I don't think this is much of a surprise, because in the midst of earnings season, as mentioned, we're in the pivotal earnings season where the past data for the first quarter, I think, is going to be great. I think we're going to get a lot of good data, but we're going to start seeing the separation of companies that are feeling the impacts of the tariff war and the companies that aren't. And this is where we're going to see the difference in resilience of probably software companies over kind of companies that have really in-depth supply chains, as according to Trump, the businessmen who criticize tariffs are bad at business, but really bad at politics. They don't understand or realize that I am the greatest friend that American capitalism has ever had. In the same speech, speaking of American capitalism, Volvo is preparing to lay off 800 people across the United States amid the tariff challenges. Ford just announced that they're not going to be shipping vehicles to China anymore. And then on top of that, Tesla, that was prepping to launch the cheaper Model Y this year to finally start competing with BYD, announced that, hey, we're not going to do that until next year. Delays as our technologies continue to get rivaled by China and other countries. I'm not a U.S. citizen. I'm just speaking for U.S. people. And we'll see what it sounds like when we actually get Tesla earnings and what's going on with all this stuff. But again, this already really plays into the rhetoric, I'm sure, many of you that are just buying dividend stocks as it is. And it'll be neat to see if the pressures weigh down on good old Jerome Powell here, and if he decides to cut interest rates sooner rather than later, because he's been delaying because the data just keeps getting rockier and rockier, even though fundamentally, recently CPI and all that has been coming in at target. But because of the tariff war, he's a bit, worried that there could be some inflationary pressures and he doesn't want to cut too early because there's a few effects that come into with cutting rates that could actually hinder the economy. But, many politicians like Trump think he's wrong and he should be fired. So it'll be neat to see how this all plays out. But man, what a drama show. That's what I'm saying. You can't invest on any of this. It's just complete insanity. Pre-markets are looking a little bit red, but I don't want you to take this too seriously because this is like a fortune teller. 9 times out of 10, they're wrong. When the market's open, typically this can go either way, but they're actually not that red. I mean, compared to some of those days that we had where we saw like 2 to 3 percentage points in the red, this is not bad at all. And also considering there's some really peculiar trading going on with things like Bitcoin right now. Bitcoin's popping up, coming into Sunday here and a Monday. So you really need to see if this is kind of an indicator that there's more risk coming into the market, which, maybe people will pick up some of the dips. On top of that, gold's still being bought up like crazy, probably by countries that are looking to separate from the US dollar, looking to continue to build out the reserves. I can only presume this is country trading, not individuals like me or you. I think gold's one of the most manipulated commodities out there, and I think this is a true sign of manipulation. And a lot of this could also play into the fact that, the US dollar continues to drop. So I think what's going on is countries might be selling off their USDs, really selling off the US dollars to, lever into gold. At least that's what I think might be going on here, but nobody actually knows. It's all kind of a speculative game. It'll be neat to see if the US dollar continues to plummet, which will help when we decide to go on our trips. It's definitely not helping my USDs in my portfolio, but it is what it is. You're having an election cycle, but it's not the US election cycle. You don't have enough insane people in Canada for that. I beg to differ. I don't know if you've seen the F. Trudeau flags on the back of many pickup trucks in rural Ontario, but I mean, it's politicized, man. I think, as somebody mentioned, this is probably one of the most politicized or one of the most divisive political campaigns in the United States, Canada, and probably abroad than we've seen in a very, very long time. And I hate it. For the most part, I want politics to be boring again. They shouldn't be memeified. It shouldn't be funny. It shouldn't be entertaining. These people are just supposed to keep the roads and schools running. It's not supposed to be this crazy. So we'll see how it turns out in time. But honestly, I will say that overall, I'm still very happy with how our systems are functioning, because I think a lot of people forget that the broad, spectrum of our countries and the issues that we have, as Trump likes to say, it's all because of Biden. I mean, for the most part, it was more or less just because of an economic circumstance called the pandemic. And I really feel like a lot of people that are complaining about housing and all this stuff, it's just purely supply and demand, and governments shouldn't really have control over that. They should loosen policy. They should do things to fast track some growth in industries that need growth. And it looks like this is the kick in the butt to get them in gear, the tariff war and all this stuff. So we should see some policy loosening. I mean, we're seeing it in the United States. We're likely going to start seeing it in Canada, regardless of what politician gets in, because they just cater to the people at the end of the day, especially when the people get as pissed as they are, which is why I think the Liberals and the Conservatives have very similar policies today. I mean, everyone kept saying the Liberals are just copying the Conservatives' policies, but as soon as Trudeau was out, I mean, you saw the execution of carbon tax and all this stuff, and now they want to get more pipelines, which takes years, and a lot of other things. The rhetoric is just blah, 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 blah. I mean, at the end of the day, who cares, right? Like I said, but what I do like is that I still feel like Canada isn't nearly as bad, and I imagine the US is in the same boat. If you're living in these countries, the media really propagates propaganda. Same with Trump, like all these guys just propaganda like crazy. But I still love this country, regardless of politics. I mean, everyone was complaining so hard about the medical system, and here I am, and my friends have been dealing with it a lot more than I'd like to be, because my stupid broken finger turned out to be a lot more than just a broken finger. Been through 2 x-rays and out of the doctors for a month now. I got to go for an MRI tonight, of all times, late tonight. So it's going to be a long evening, but hell, I'm happy to just get the MRI done. And then before I know it, they're going to cut my finger open and scrape out whatever's in there and fill it. So that's going to be fun. But I'm happy that it's happening quick because, whoo, baby. I mean, people were telling me it takes over a month to get MRI. I mean, even my doctor was saying that, but literally within 3 days of him making the recommendation or putting it in there so I'd get the call, it's literally 3 days after the doctor set me out for an MRI. So anyways, things are moving very quickly, and to be in Toronto, a very populated city, I'm shocked I mean, some things were slow, but this is great because this is more concerning to me than some of the other medical stuff I've been looking into. But I love Canada, man. I think, getting all this stuff done and not having to pay for insurance or bills on any of this. In fact, Canada is great because they charge you when you don't show up for the appointments, not to show up for them, which I think is also a good incentive to get this stuff done. But it's all fun, man. I still love Canada. I wish you just turn off the news, go back to living a great life. Things aren't all that bad. But nonetheless, let's reroute this back to talking about the dividend stocks and where I want to see myself, this channel, and kind of where I'm progressing to. Because, yeah, I'm getting a bit exhausted. I've been nailing out content. I mean, look at this channel. There's something like 2,000 or 3,000 videos since I started this 5 years ago. It's kind of ridiculous, the amount of content that I've outputted, but it's led to a lot of great things, great community, a lot of you guys out there that are watching this, on this wonderful Easter Sunday. But nonetheless, like I've been really contemplating on how and what I'm going to shift and start adjusting for, because I think what I'm going to do is largely start taking my growth stocks, as mentioned, the stocks that I'm utilizing. And I think this is the final arc of like my growth season and like these individual plays to the extent that I'm doing it. Because you'll notice a lot of channels, like they try and build communities off individual stocks they absolutely love. I think it's great building these theses and these communities around this stuff. But largely, we all recognize that 90% of you should just be putting it into these index funds, calling it a day, but that's just not entertaining, right? But even for me, as somebody that makes this content, looks at the market every day, I'm like, look, I still want to outperform as much as I have over the past, but those days are going to come to the twin end. Like, I'm not going to be doing this like dumb money is for the rest of my life. I don't enjoy it to that level, the insanity, the roller coaster. It's just, I just want to, actually get paid, not have to work, have some, financial freedom to go travel, actually enjoy time with my family and stuff that I like doing now, just a little bit more obviously, right? So when it comes to these individual stocks, I'm going to scale them down and probably put them in my corporate account where I can take advantage of maybe some of the ups and downs and actually write them off. Because in my TFSA, there's no advantage to losing money in that account. There's no write-offs. There's no taxable or, capital gain deductions. You don't get any of that in your tax-free savings account, but I'm trying to utilize it because if I get the growth is tax-free, which is why I'm holding things like Take-Two Interactive and Google and some of these stocks there. But eventually I'm going to rotate them over and scale them down. Between the wife and I, like I said, we have six figures in a handful of individual companies we believe in, and they've greatly benefited our portfolios over the last, several years. But it'd be nice to see in the next few years if they can really excel the growth. Because again, there's no guarantee that's going to happen, but if luck is on our side, we made the right investment choices. Hopefully they give us an extra bump that we will start scaling down. I don't want to get rid of them permanently. I do like them long-term. Google, Meta, I don't see a reason to get rid of them long-term. I just don't want them to make up the 20% plus, or around 15 to 20% of the portfolio between the wife and I as it does today. I wouldn't mind getting that closer to maybe 5 or 10% between a few stocks we like. Because again, our portfolio scales are scaling pretty dramatically with the money we've been putting in here. With the stock growth, over the last year or two, especially. But yeah, it's going to be neat to see what happens. So what I'm going to do is scale those down, and I'm going to be looking at purely just probably putting most of our money in a combination of XEQT, which has around a 2% yield, I think, right now, VOO, which will still maintain a huge position in the overall portfolio. VDY, probably scale this closer up to a 20%, keep it around the same length as SCHD, because right now it's pretty small. I'd actually, between the wife and I think it's pretty even with SCHD because she does own a lot more of this. SCHD will remain. I'm looking at something to pair with SCHD that can oomph a little bit more dividends out of the United States. Because I think SCHD is great. I want to use it as a long-term hold, but when I want to actually start cash flowing my RSP and pulling some of those US dollars out, I wouldn't mind looking for something I can put in there where I can actually maximize the potential of the dividend income in the United States, where I'm not getting that withholding tax. So I have been looking at things like Divo, for example, which I've talked about in the past, which is probably the only option ETF I've ever really found that attractive. And it would make sense if I want to pull the dividends out because it has a very great long-term, well, at least since it's been inception since 2016, a really great, total return with the dividend. I think it, average since inception around 11%, which is incredible. I like looking for ETFs that at least have that double digit over long periods of time total returns, so I can still get the growth plus, the income. HYLD is not bad. I think it's been performing pretty well right now, but it doesn't have a long enough track record. And like I said, these option ETFs are still a bit sketchy in these rockier environments because HYLD has only been around literally since 2022. and it's down 27% on the equity side. But what's the total return since inception right now on this guy? I think we're looking at, since inception, you're looking at 4.98%. Like, you just don't have enough data to buy this right now. I would be avoiding this. I know a lot of people like it for some reason. I don't get why. I don't understand. Like I said, I'm not an options guy, and I'd rather write options myself than pay somebody a fee to do it. But when people just point out these option ETFs that have no track record in rockier markets, it's really hard to do covered calls correctly. The dividends drop, the total returns are garbage. You've been better off putting your money anywhere else than in here for the most part, I think, since 2022. Not trying to criticize it too badly, but I mean, what's like the S&P done in the same time frame, right? Like, you think you're getting a 13.8% yield, but really your yield is closer to 5%. That's all you're getting, which XEI has way better performance than that over long periods of time if you're looking for Canadian income. But let's just do a quick comparable. If we were to say like HYLD here, like compared to even VOO in 2022, how long is that? This hasn't even been like a few years, right? I wouldn't even be able to get a proper chart, but I mean, you kind of get the point I'm trying to get across here, right? I think there's better options. The yields smoothest out some of the volatility. To some extent. Is the gain since inception on my chart? Yes. I had to backtrack what I was showing. The only way I can show you my total gains is literally in the chart that Scotiabank gives me, because it just actualizes what I end up getting on my T5 anyways, like the total dividends and capital gains, putting aside like the cash I put into the account. It's the easiest way I can show you the percentage gains, and I can actually narrow the time frame down, which is what I should do. And maybe I'll do that in a video where we'll take a look at the actual comparable against the S&P, because my chart here gets too wonky because I've been selling, buying, moving things around, and I could have to, if I buy anything right now, I have to adjust it to the starting year price. And it just started to get too wonky. And I realized that like the percentage gain was probably not maybe that far off, but off enough that it wouldn't be accurate. So it's just easier for me to look at what's in the account, divide it between all the accounts to see what my actual average cost is. And keep in mind, this gain doesn't include profits that I've taken on Tesla, losses that I've taken, the small losses on whatever in the meantime, like TELUS, I was in and out of there a little bit. I mean, it's like I said, the only way to tell is through what the banks are actually giving me overall. Thank you for the conversation. I appreciate it. So will you go all indexes? Probably not. Like I said, I want to keep my growth stocks just smaller, no more than maybe 5 or 10% of the portfolio in my corporate account, just so I can actualize losses or gains in a more controllable manner need be. But yeah, we'll see what happens. But let's get into a few Q&As here as well, because a lot of you pointed out some great stuff over the week, like living below your means is key. Having a partner that shares some shares that way of thinking is huge. Honestly, I think having a partner, regardless of, as long as they're on the same kind of idea of money, but having a partner, I think, makes a huge difference financially and, just living standards overall, because I'm one hell of a degenerate when my wife's not around. I don't want to give off an appearance that I'm wealthy. I want to be wealthy. I have seen so many people fail to gain any ground because as soon as they get a raise or find a better job, they immediately find something to spend extra income on. And I think this is a great point, because, to put into perspective, we fired our first realtor because he knew how much capital we had and what we were working with. And his thought was, well, you don't know where you're going to be in the future. So just take what you have, put it into what you can afford to get at the end of the spectrum, and then put a bit of money aside to float that property for the first 2 or 3 years. And then just see where you're at in 2 or 3 years. And that level of anxiety killed me inside. I'm like, I want a property I can pay off in a few years. I want a property that like is so well below our means that we cash flow ridiculous amounts of money that I can just invest it and rebuild our portfolio back as aggressively as possible to get to that financial independent place. And I don't think he understood that to the level of what we were looking for. Because obviously, like, we could have afforded a way better place. I mean, we had the option to, but why? Like, why? Just because you're making more money, right? And we're both in a position where we're making a really great combined household income that is so far beyond like our housing costs. But again, like, we want that freedom. We want to be able to travel. We want things that, aren't like living standard related. And what's crazy to me too, is even this place we bought is comfortable, but when I compare it to other like places that are similar size, but in nicer locations, like everything doubles. The property value doubles, like the HOA, the property tax and all that stuff. And I'm just like, why? Like, to live downtown or in some bougie areas, to have literally like the same square footage, but like, like double the cost of living for the same kind of like luxury standard, just to say you have a location. And those locations don't make much of a difference to me. I don't think they're much nicer. I don't need to live in those areas just to be around bougie people. I'm very happy living where I'm at, closer to family, closer to work. It's kind of funny. Maple Leafs buzzing right now, but it's still listening. Good. I'm not watching the game, but maybe I'll catch some of the highlights. It feels like Trump sees everything as a business transaction of pure numbers, even while not being good with numbers. He seems to have forgotten that goodwill is also a business asset that people put a price on, and he has done some serious damage to USD goodwill with the rest of the world, and that's not something that is easy to rebuild. What do you guys think about this? Actually, this has been a debate I've been having with some of my friends, because I mean, there is damage being done in the short term. Obviously, how consumer spending is working out right now, how travel is working out. I mean, we're seeing the travel slumps, the searches for people that want to leave America, though it's likely that that's not really going to happen. It's hard for people to relocate in mass quantities. But for the most part, I'm curious to see if Trump actually is right and the damage that he's causing ends up simmering out, and it's kind of that short-term pain, and eventually it alleviates, things start to level off, people go back and focusing on business and whatever. I'm curious if that is actually the end game and it works out that way, or if what we're seeing becomes a more permanent reality, where the EU and all these other countries start more or less focusing on each other and better trading partners, where the conversations are more united. Especially with Canada right now, you're seeing that mass influx of China buying our oil over the United States. It'll be neat to see if that ever changes, or again, if these are permanent things, because like you're playing a weighing game here of Trump thinking he's doing something good in the long term, but is the short-term damage worth the long-term benefit? Where that's the obvious debate, and we won't know until obviously a year or two goes by, and we'll see what the actual lasting impacts are if GDP grows. I mean, that's the end defining factor, right? Like, we need to see GDP growth. If GDP goes well above the original trend that it had, then yeah, you can say he did something. But if it doesn't go well above the original trend that we were on, then maybe it was just a bunch of fluff that didn't really add or minus anything to the economy. That's the debate, I guess. I'm wondering about your thoughts on holding XEQT and VDY. Is it the intent to add weight to overlap these funds? I don't know if you want to overlap them that much, because I'm mostly the United States, and it's not because I care about Trump or politics. It's just because I care about where the best businesses are, and the best businesses are in the United States, and most of them operate as global businesses that have, basically the income and the balance sheets that could be represented in some countries' GDP in an entire year. Like Apple and Microsoft, for example. So, and those countries are dealing with Trump just as much as countries like China are, because obviously, Apple just wants to run their business in the most tax and money efficient manner as possible. Trump's not making that easy. So like I said, I don't even think these companies care as much as about just getting things back to an even keel and get the motors running. But yeah, it's just a matter of how you want to overlap them. I like being mostly exposed to the United States and Canada, but I recognize in wealth preservation and as our portfolios scale, you want to get your money globally diversified to some extent. I don't believe in total global diversification. I'm not like a VT till I die sort of a guy. I'm not like strongman personal finance. I'm not that crazy. I do want to put my money where I think it's diversified, but where the best companies are, and where they'll continue to be. How much of your portfolio would you allocate to Canadian investments? I don't want more than 20% for the most part, because again, Canada hasn't proven to be like the most greatest growth place, but I mean, you can get good ETFs here that still grow by 9 to 10%. And VDY is one of those. I think I talked about like the BMO low volatility ETF, the broader Canadian ETF, VCE is pretty good. But yeah, it's up to you. Or you can buy XEQT and just basket them all in a very comfortable way. But obviously the S&P has largely outperformed all those ETFs, and in time we'll see if that. I mean, I look at VOO as a growth ETF. So I mean, it's a great place to get U.S. exposure, in my opinion. But it's funny, I buy a stock at $50, it goes to 65. I say, man, I wish I bought more at 50. Okay, now it's 40. Great. Now I can buy more, but I'm not that excited about it. So this is the funny factor of like investing for me. I lose my mind when the market drops, because it's such a rarity when it happens. And you got to kind of get in that. That's how you get rich, is understanding like the psychological factors, because you play with the bar of soap too much, you tend to lose a lot of it, right? And people like to play with it in moments of extreme fear. But when people get extremely fearful, and my family's calling me and they're all freaking out, asking me what's going on, that is my ultimate buy indicator. That's why I've gone balls to the wall and, just way too aggressively bought into this market. And, the markets have leveled off now. So now I have time to stack up some cash again. And if the markets drop again, hey, I've had a buffer. The markets have leveled off a bit. I got some time to reallocate my stock market emergency fund, build back my accounts. But if that doesn't happen, then hey, I went aggressively as I could when there was maximum fear in the market. And that worked very well during the pandemic. I mean, the whole reason we were able to buy this condo was because of the pandemic era. I mean, I can't express that enough. When there is blood on the street, baby, get ready to buy real estate a few years later. We'll see, though. No, that's not a guarantee. Don't quote me on that. But you look at every crash, the dot-com bubble, 2008. Mind you, the 2008 crash lasted a while. I think it was like 6 months before it bottomed. So maybe being that aggressive might not have been a good idea. But in the pandemic, I felt like it was a short-lived reality where there's going to be damage done, but it's not the end of the world. It was just a lockdown period until the pandemic passed, and it wasn't really company related. So I don't know. Plus the government printed an ungodly amount of money that did pump up a lot of assets. So it definitely worked to our favor. We're in a different market now, a different environment, but I still think the thesis remains the same. Just buy when there's fear on the street, come back to me in 5 or 10 years and tell me it was a bad idea. Because no one cares about the pandemic anymore. No one cares about 2008 or the dot-com bubble or 9/11. No one talks about that shit anymore, but only in reference to, the markets are overvalued and fear and whatever. But every time it crashes, it's always been great. I always love it. Will you stream GTA 6? So, the wife and I were joking about this because I said I will only play or buy GTA 6 if my thesis plays out and I make an ungodly amount of money and I at least double my money. I want to see my 35K I put in this company become like 60 or 90, because I really think I can double or triple my money quite easily with this company. At least I hope that's the case, because I still think people are underestimating the value of this. Will I stream it? Maybe. That could be the new arc as I get toward my financial goals and the real estate gets paid off and our portfolio values hit my financial freedom numbers, which hopefully comes in the next year or two, depending on what the markets do. I mean, it could come sooner if GTA 6 prints some decent money for me. But regardless, will I stream it? I don't know. Well, I don't even have a PlayStation or an Xbox. In fact, the last time I played GTA 5, I bought it and I played it at my buddy's house because I said I'd buy the game and we'll just play at your house because you have a PlayStation. I didn't want to buy a PlayStation. It was too much money. So we'll see. I don't know. Honestly, like, I've kind of grown out of games. I only really play VR religiously. I still kind of like a gaming. I play with my buddies, like zombies still and whatever, some Call of Duty stuff. And I play VR a lot. But I'm not like as much of a gaming nerd as I used to be. I'm not playing like every new game out. I'm not that obsessive over it. But GTA 6 might boost also Xbox segment revenues if Microsoft, I think there's like 100 million new Xboxes and PlayStations in the wild right now. But I think, by the time this game comes out, there'll be tons more. And there'll be a lot of people like me that might just buy one just to play the game if I make that much money. Time will tell, baby. Let's hope. Here's to hoping. It might be one of my last real trades. I still got my speculations in my small caps like a Duro, but I think like these will be some of my last major trades. And then I'm just going to mostly index it. I don't know. Well, who knows where we'll be in the future, but I'm getting to the point where I'm like ready for the next arc of this channel or this next arc of whatever. Because again, like I was a magician for 10 years. I've now been doing the stock market for what? More than 10 years. I was a magician, right around maybe 10 or 12 years. This arc in my life has been going on since roughly 2019. So we're about 6 years deep. So 6 years, I'm one of those guys that like to switch it up, to go from a full-time magician to a financial clown on the internet and working in the finance space and the stock market space is just so peculiar, but it's been fun. But I feel like, eventually I'm going to get exhausted and I want to enjoy my life. Life is short-lived, as I'm constantly reminded by the illnesses that my friends go through. So I want to make sure I'm enjoying life. Watched Sinner last night, and for 2 hours, I forgot about the crap storm this new administration is creating economically. Yeah, I know it's good to kind of get yourself out of that mode. Did you not feel like, have you ever watched Mo Amer? I don't know if you've ever watched it, but we actually went and saw him live, which was pretty cool. But in his live comedy act, I think it was on Netflix as well. I mean, he always does this thing where he's like, you always feel like you're just in this constant state of all the time. Like you just you're like arguing with your friends. Like you gotta just like, it's hard to unwind in this environment. It's just, you can't joke about shit. People are just so goddamn serious. Why so serious all the time? It's annoying. calm the fuck down. Like, people trying to figure out which stock will perform well with AI. Would that be Google, Amazon, Microsoft, question mark, or some other small cap growth companies that yet to IPO, or some of them would never IPO? Would it be Tesla or Waymo or autonomous driving? Well, no one has a clue, but I know for a fact that we are all going to use a lot more chips over the next 10 years, from developing countries to developed countries due to AI trend. For this reason, everyone should own SOX, the semiconductor ETF. It will perform very well. In fact, SOX QQQVO, in terms of performance, you need to swallow volatility due to the cyclical nature, but still will uptrend upward guaranteed. I don't know if upward is guaranteed. I would so he's mentioning the Qs here. So my fear with the chip sector is go back and look at Silicon Valley and look at what those chip companies were leading back then, because it's not the chip companies that are leading today. And my big fear is we don't understand. I'm not an expert in chips. I know there's companies working on diamond-based chips. There's quantum computing. All of these things, if evolved in a manner that are more efficient than the chips that exist today, could highly disrupt companies like TSM. I just don't know. I love lithography machines. They're marvels right now to the world. That doesn't mean they're going to be marvels in 5 or 10 years. I would avoid, I know it's like oil today, but I would probably avoid the semiconductor ETFs. If you're looking very long-term, if you're like me and you're short-term trading this stuff, when I mean short-term trading, I mean maybe 3 to 5 years, you're paying attention to the sector. Right now is a great time to own it. I am not that excited about it right now because I missed the trade when I was buying TSM. I'm an idiot. I should have held on to it. But what I would focus on is maybe the Qs if you want that growth, because at least if those companies start to underperform, they'll be managed out of the ETF. If you're not going to manage it, this is why I like owning the S&P 500, because I'm automatically owning some of those chip companies. And it's why it's good to own some global ETFs that hold things like TSM. But you could also just buy the Qs, get that exposure and not manage it. Because over time, these things are going to change dramatically. And the chip sector is also going to evolve dramatically over the next decade. Again, if you look at any time in history, and I want to make this very, very prominent, any time everyone and their grandmother has talked about it, 9 times out of 10, if you jump 10 or 20 years forward, it doesn't even exist or matter to the extent that it did 10 or 20 years ago when everyone and their grandmother was talking about it. And this is what leads to a lot of bubbles. This is why everyone thinks AI is a bubble, because we don't know what the technology looks like 5 or 10 years from now, but we're pricing it as though we do. And that is why you don't want to invest in shit like this when everybody and their grandmother can't shut the F up about it. It's why you got to take it with a grain of salt. It's why I like GTA 6. Because no one's really talking about it. I love finding my own little crevices where people just don't. You want to know how I know no one's talking about GTA 6? And same with Aduro, right? I love these little crevices in the market where you can find your own little void and you're like, ooh, I like this. I'm interested. It's not crazy overvalued by my own personal numbers. And I don't have to price it out 5 years from now to get a rate of return. Though chips are looking cheap right now with the crash. But if you go on YouTube and let's just look up GTA 6 stock, what comes up when I look this up? Oh, look, my video's #1 from 2 months ago and the CEO. And there's maybe one other video here, another one of my video. No one's talking about this. What about Take Two? We do TTWO stock. TTWO stock. This is what I love. When no one and the grandmother's talking about it. I guess there's a few other people. Kramer talked a little bit. Few people talking about the stock. Very far and few in between. And these guys don't get any views. My video has the most views on GTA 6. It really shows you no one gives a shit. I love when no one gives a shit because it means it's likely undervalued still. But that's what I don't understand, why people are so they don't take that into consideration. It's I like Palantir. I don't get the company that much. I get why people love it. But when everybody is talking about it and at some point you're going to reach maximum buyers and you're going to reach maximum valuation for the next 5 or 10 years. I think Tesla's there. I think there's a good chance Palantir's there. There's a good chance a lot of companies in this market environment are there. And I don't know why everyone is so excited and new people just buy into it because everyone's talking about it. I'm telling you, I've seen it over and over. It's like NFTs. What happened to those? I mean, what happened to tulips? It's all these things have fads, right? They just come and go. And then there's the next hype cycle of whatever the next thing is. And they're fun to trade, but they're not fun for long-term investments because typically you're buying them at an overvaluation. It's why Buffett doesn't buy into this stuff, even though it probably worked to his favor if he would just buy the dips when the market crashed. Is the hair AI? No, the hair, I cut it a little bit. Doesn't look too bad now, does it? I did clean it up a little bit. I'm still like Jimmy Neutron, stuck in the 90s or whatever. But yeah. Anyways, folks, what are you talking about down there in the comment section? This is how I feel about Kraken Robotics. Yeah, I mean, exactly. Like Kraken, I think I looked at they're even talking about for a little while. You know, it's fun finding like little niche stocks, or even in the private sector. This is why small caps are still interesting, because a lot of people hate on them, and they're like the most toxic sector of the economy for some reason. Because like I get it, they're risky, but so are big mega cap stocks. I mean, you can't tell me Meta dropping 80% into 2022. Like that can happen to a lot of companies. When you're buying individual stocks, there's always market risk, which is why it's so important not to build a whole portfolio of individual stocks. I think it's ludicrous. When I look at like, especially on Blossom, like it's fun scrolling through on Blossom and just seeing these experts portfolios, and like you look at them and you're like, you really think you're an expert on 40 companies in 5 different sectors? You think you're an oil expert, a chip expert, this expert? It's like, what's wrong with you? It's like, I look at you and there's no expertise coming out of your mouth. You're just looking at past performance numbers. You have no idea what it's like to work at those. But I mean, look at United Health. I still see people today talking about United Health. And I'm like, you realize their CEO just got assassinated and there's a whole new business disrupting them. And the stock had the biggest drop since like 1998. And everyone's like, this is a great dividend stock to buy. And it's like, what are you talking about? You have no idea where the future of this business is going. You have no idea if people finally get fed up with paying for shitty health insurance and they finally get universal basic health care like Bernie Sanders has been begging for. I'm just saying, like, if that ever becomes a reality, these companies might be useless. If you do not understand these businesses, where they're going tomorrow, you should not be buying them, because the past doesn't represent the fucking future. That's why I love talking numbers. I like making sure fundamentals are good. I like making sure companies have a lot of cash. It's nice they're doing share buybacks. I get all of that. But you have to understand, if you cannot recognize when the fundamentals of these companies are shifting and get out, you are not meant for this game. This is why people made fun of me for flip-flopping and like meet Kevin, because I have flip-flop, but I missed out on some major losses. Like I have never taken a severe loss in my entire investing career. I've only taken major gains. And the biggest loss I think I ever took was in GEO Group. And I think I took like a 40 or 50% haircut in this. And if I held on to it, I would have made more money than I lost, because I think I was buying it over here somewhere when it dropped by like 40%. And then I got out. And this was like my biggest loss right here. And it wasn't even a huge position, but I'm just saying, you got to be real careful with what you're doing, because it takes a long time. I mean, I would have been sitting in this stock and it would have, I guess it recovered fairly quick. I mean, it didn't take too long from 2019. I think it was 2018, 2019, sometime I was buying this. Yeah. I mean, it would have taken if I held long-term, I might've been all right, but who would have guessed, Trump presidency, what got us there? There's no guarantee he was getting elected. Tesla has potential to own everything with, no, it doesn't. Relax. This comes back to the point of like, how are we going to do this conversation? I feel like I lose subscribers when I start battering Tesla. As somebody that has made a lot of money in Tesla, like I'm hypercritical of it because their executional skills suck. And like I become hyper aware of it because I've been paying attention for it for like several years now. And I'm like, just kind of over it. The valuation is nuts. BYD is actually like taking all of Tesla's market share because they just can't make affordable EVs. I don't know why it's so hard. I mean, BYD is pumping them out like there's no tomorrow, and they're selling them at a global scale. Nobody seems to care about robo-taxis, which, by the way, were supposed to be one flick of a switch. And the car that you bought in 2019 was supposed to become a robo-taxi network you can make money on. But guess what? That dream is dead, because that car you bought is going to be worthless. And right now you need to upgrade the computer in it to even get the decent version of self-drive. It's ridiculous because Elon overpromised, underdelivered, and the stock is a bubble. It cannot trade at 100 times multiple because we don't know what businesses look. I mean, you see what the robots are doing today. A literal robotic arm for half the price could be, probably a tenth of the price, could be doing the same thing. You will not see robots in your house cleaning your dishes anytime soon. I'm just saying, it is one of these things where it's another wait 10 years and find out. And we have no idea what the CapEx is, the margins are, nothing. And so far, Elon has proven that he has not been able to produce a company that can't do anything, nothing special to what GM has done. I mean, their margins right now are garbage. They're not some like futuristic energy company like we were promised. I had so many high hopes and dreams for this company, and it's just been skewed so much that investors are just cult. It's just a cult. I mean, their profit margins are garbage. Look at their profit margins. Would you rather own this at 100 times multiple with no idea what robotics are going to look like? Or would you rather own a company like Google that has a lot of the same future ahead of it, a lot of the same industries ahead of it, but it actually has profit margins that are at 30%, that has tons more money on the balance sheet, that is growing its revenue at an absurd clip on the back of a very rocky environment? I mean, you can compare Tesla to any company, and it's like, why would you want to buy this right now? You have no idea what the future of this company looks like. And everyone keeps saying it's not a car company. Well, I guess it's not. And their whole margins and their whole revenue stream is based on it still, for the most part, at least until energy catches up. And energy could catch up, but I mean, just calm down. Don't get caught up in the cult-like nature. Tesla's like 10 years out from producing any value at the current value it trades at. Sold my Tesla, but I still wonder if there's stationary energy storage may grow if it drops by a lot. And Elon is, I mean, I'm not saying like Tesla's not a good buy at the right price. I just, like I said, I traded it last year, made a good 40% gain on it. But like, I'm not going to buy it when I think the stock should be trading at 100 or 150 bucks. And that's still pretty expensive for the value it's at today. But I just don't understand how it trades up here, other than it's held up by indexes because it made its way to the top of the indices. So you got all this index money that keeps playing it and keeping it high. And you got all these cult fall. I mean, what's the current? That's a good thing to point out. What's the current retail? I mean, Google, let's just do a quick comparable. Google it's 81% held by institutions, right? What's Tesla's institutional ownership? I'm just curious. Out of curiosity here, Tesla has, look at held by institutions is 49%. So it's like mostly, I mean, half the company is held by retail. And not half, because 12% is insiders. So, I mean, still a huge chunk, like what, 40% of the company, 35, 40% is held by, retail. So it's a huge retail stock still. So yeah, it'll be interesting. Jeremy entered the chat. Good. Jeremy who? CGL is safe hedge. Kyle, what's your thoughts on crypto and its use in tokenization of stocks, bonds, and real estate? Like when I was just mentioning NFTs, I think NFTs are brilliant. I'm honestly shocked NFTs haven't become a real thing yet. I really thought they were genius in the beginning, other than the joke of art. Like it should be used for transactions in real estate and whatnot. I don't know why it's taking so long. This comes back to the point of like, it takes a very long time for technology to catch up, because I think Bitcoin's a bit of a joke. I don't think it's efficient. I think it's garbage. I think a lot of people in the crypto space recognize that. I think the problem is Bitcoin has become so big, people that get into the crypto space don't want to make some new technology that is so hard to get traction and build an audience for, when you can literally just build a system around what everybody loves, which is Bitcoin. And we own Bitcoin. I own some Ethereum. Don't get me wrong. There could be a future there, but the concern is it's not that efficient of technology. There are better cryptos out there, and there's going to be better technology down the road. We're already starting to see companies integrate new rail systems. Like it will become the new way of transaction in the future because it's more efficient. You can do microtransactions, things you can't do with Visa and MasterCard today. But the reality is it takes a very long time, and I don't know what that future looks like. And for the most part, I think Bitcoin is nothing more than a Ponzi scheme. I mean, like, tell me otherwise. Like, what's so great about it? The only thing it's really good for is international trade. Like, you can take Bitcoin and send it around the world a lot easier than you can gold, money, and a lot of other things. But then again, I do international wire transfers, and I don't have that big of a problem with it. Wire transfers are pretty easy for the most part. Never had an issue. So, and it seems to take just as long to send Bitcoin sometimes. You ever send Bitcoin and you have the commission fee too low and it never sends, and then you have to raise the commission fee? I mean, even moving Bitcoin sometimes can be a hassle if you're too cheap about it. It's why I buy NASDAQ as a whole instead of individual stuff. Yeah, it's smarter. It's so much smarter to buy growth in the NASDAQ than it is to try and cherry pick. We're trying to cherry pick. We'll see how it plays out, but it's for mostly short-term or swing trading. With things like GTA 6, which doesn't really get held in the queues, or the Take-Two Interactive. And I just like Google and Meta personally. I've really liked them a lot as of recently. YouTube seems to be pumping Amazon right now as a strong buy. I don't think it's a strong buy until we get through earnings and we understand what the tariff impacts are. 60% of all items sold on Amazon come from China. Alibaba makes Amazon look like a joke. I mean, it doesn't do the same revenue because it's selling things for a lot cheaper, but I think it does 4x the shipment volume than Amazon. I mean, think about that. Think about how big Amazon is, and imagine that Alibaba does 4 times the shipment volume, I think, in products. And a lot of stuff you buy on Amazon comes from Alibaba either way. So yeah, it'll be real neat to see how Amazon sellers are, stomaching this tariff volatility. So I mean, it's gonna be crazy. Sol and XRP are fast and cheap. Thoughts on Solana? Solana is one of the better ones. I know everyone likes Solana. I hear a lot about XRP. I do like the meta. I was really hyped, to be honest. I'm a little disappointed because I thought the metaverse, or not the metaverse, but the crypto space was really going to overtake video games, because I thought that's where we'd see the first oomph. Was that, okay, video games, the biggest problem with them today is there's so many microtransactions with things you can buy in the game, but you can't take it out of the game. This was a big problem with RuneScape. Like, if you go back to old school RuneScape, like, the problem was people were selling stuff off and manipulating prices. There was insider trading. RuneScape, if you're not a video game nerd, you should look up the history of RuneScape, because you want to talk about fascinating economics. I mean, the shit that went on in that game was wild. But I feel like video games need to level up to the point where you can pull things out of the game and trade them on third-party, auction sites. That's the whole point of NFTs, right? And all this stuff. So I'm really sad that we're not there yet, because even Zuckerberg was talking about that, and we don't have that dream alive. And I don't know what it takes to get us there. But like I said, that was years ago when they were talking about that. And here we are, and it hasn't happened yet. So again, calm down on hype when it comes to robotics and Tesla, because shit takes a lot of time, and people typically get bored after 5 years of waiting. If GTA 6 uses crypto, so I think Aiden Ross said, because you can customize your own servers, I'm really I'm skeptical, but I'm excited to see if you can actually insert your own currency, because I know they have like their own in-currency trades, but I'm really curious if you can make the game, make your own server and actually trade your own crypto inside of it. That would be insane. I mean, like, that's what people don't understand either. Like, they're just pricing GTA 6 based off the game sales, like literally just the numbers of how many you're going to sell. And analysts think they're going to sell between $3 and $4 billion worth over the year. My speculation is they're going to sell $3 to $4 billion worth in the first week to a month. They're going to sell 50 million at least. I think they're going to sell 50 million copies, and then forget about microtransactions. We haven't talked about microtransactions. This is why I'm saying it's going to Take-Two. It's going to double to triple the revenue probably by the end of the year, and it's going to make them cash flow positive, probably somewhere between 2 and 5 billion is my guess, which means they're trading at like 10 times earning. They'll be trading at 10 times earnings and about like 10 times, probably 10 times earnings and 10 times revenue at today's sales price. Am I saying that right? I'm saying that wrong. But still, like, the fundamentals to me look super cheap if what I'm thinking comes into fruition. And because it's going to be a growth stock, people are going to lose their minds, and it's probably going to trade at a 20 times valuation. So it could easily be a 60 to $90 billion company. Like, am I like out in La La Land here? Or are just people missing this shit? Like I said, I just feel like the game is so hype, and I got that proof from the trailer. It broke all YouTube records. Like, every dot says this is happening. Like, do I want to be a part of this? Fuck yeah, I do. Like, I feel like I still don't own enough, but I'm trying not to get too crazy because there's market conditions that could severely fuck my trade up. But so far, it's working to my favor because Take-Two has been my best performing stock. Everything's gone down except for Take-Two. I could sell it today. I wouldn't have made any money on it, but I wouldn't have lost any either, which is crazy. Really, really crazy. Kyle, what's your thoughts on crypto and its use in tokenization? So we just kind of mentioned that. What else is going on? XDIV and VDY. We've been going on for a while. The problem is my doctor's appointment for my MRI is at 2 a.m. Figure that out. I guess they do 24/7 MRIs. I was kind of annoyed, but at the same time, I'm happy I'm just getting in early. So, I mean, we could just sit here until 2 a.m. I mean, usually I'd be in bed by midnight, but today's going to be a late night, folks. Today's going to be a late night overall. So what happened to Take-Two after GTA 5 launch? Let's take a quick look. Why not? So here's the thing. The problem was back in those days, was Rockstar owned? I'd have to look at the history of it and actually see what the real history of the company was, because I think if we're using this, and we were taking a look when GTA 5 launch was in 2013, and the stock jumped up pretty decently within the first year or two of that launch. I mean, it doubled itself within the year, but I mean, the real money was to follow, right? But there was so much going on with the company. This was a really great period for Take-Two Interactive. But like, I mean, we're only just hitting highs that we're seeing during like 2021. I mean, the stock is basically like flatlined over the last 4 or 5 years. That's why I don't think like people are really understanding where we're going, because we're trading like a $37 billion value right now. But yeah, I think this is going to happen again. I think but it'll be a little bit more aggressive. I think we'll see a good year of, again, doubling or tripling. So we'll see what happens overall. For XCI versus VDY, do you think VDY is better due to the more eligible dividends? XCI last year had about 80% of the dividends being eligible. So the reason I don't like XCI as much, but I would buy it. I mean, it's a great retirement stock. But let me just show you the quick comparables, because like I said, at the end of the day, like I want to get about a 3% yield in the totality of like the wife and I's portfolio, but like I still care about total returns. And since inception, like the returns have not actually been that great with XCI. They're not terrible. They're still better than some of those option ETFs we looked at there. But I mean, since inception, like, total return 7.33%. Again, these are annualized returns. Cumulative, I don't want to look at cumulative. I like to think in annualized, because it's just easier to, compare it to like the S&P 500. Like VOO has been doing 14% annualized. So like I could easily double like this annualized return just by owning the S&P. So if you compare it to VDY, and this is why I like VDY over, XCI, is VDY in the same breath here, if this loads, which I think I have to pull up the fact sheet for it, because I don't think it's listed on the overview. Let's pull up the fact sheet real quick. Let's take a quick look here. Yeah, I mean, if we take a look at the total returns since inception annualized, VDY has been doing about 9.9%. So, I mean, 7, 8, 9, 10. And just to show you how big of a difference this is, and this is why I like using compound calculators, because this really shows you what a big difference these two returns will be. Let me pull this up real quick. So the difference between 9.9, we'll round to 10. Let's just do it like a comparable. Let's just say 10 versus 8, because it's not too far off. There's about a 2% return difference. So if we just take a look at a compound calculator real quick, and let's just say you're going to do this over a 15-year period. We'll keep it pretty short for those that want to retire early or whatever. But let's just say annual additions. Are we going to put annual additions in? Let's say no. Let's just say we have $100,000. We're going to put 100 G's into VDY, and we're going to put 100 G's into XCI. If we're going to put a 10% return, we're going to do this over 15 years, or we'll say 15 years. Why not? And let's just say you're getting a 10% off VDY. In 10 years, it's likely you're going to make about $417,000 off that 100,000. But if you lower it to 8%, let's say with XCI, you're going to see 307. So you're leaving like an extra 100,000 on the table, right? Give or take. And that gets crazy over longer periods of time. So let's say you're holding it for 25 years. I mean, you're looking at 684,000 versus that extra 2% that would literally take you up to $1 million. So you left about $400,000 on the table over a 25-year period. Again, there's no guarantee that those are going to be the returns, but these stocks have had fairly long-term, they've given you over a decade of performance to give you an idea. But this is why, like, you really want to look for things, because those couple extra, this is why I buy individual stocks and I trade a bit, because if you know what you're doing and you actually get those little bit of oomphs, I mean, like the amount of money that annualizes into gets kind of insane. But like I said, that's how I've gotten my portfolio to where it is today, right? By paying attention to these little numbers, because I've been doing it for a decade now. And in 10 years, like, just to get some really good wins, like, because by leaps and bounds, by buying those dips when the market drops on those pandemic levels in like 2022, and now here's another drop that I'm buying very aggressively, like those will inch out way higher returns than, when you're buying over, say, like the last year at the tops. So like, you got to understand, 1% doesn't sound like a lot, but if you can do an extra 1% over a 20-year period, I mean, you're talking about hundreds of thousands of dollars. So it's a good thing to pay attention to. It's why I don't want to get caught in the dividend trap of things. This is why I'm happier making a 3 to 4% yield on my overall portfolio, but annualizing somewhere between a 9 and 11% in totality. Though I've done much better than 9 to 11. I'd be curious to see what my annualized returns actually look like, because I think I calculated it before, and it's probably closer to 18 or 19% or something like that. Just because we've had so many good wins over the year. RuneScape is the best. I used to make like 80 cents every million in that game. Yeah, I knew people that were mining it, because I remember that. What were the stupid things people were trading that became super popular? Those dumb party hats. Like, there was a whole industry around those stupid fucking party hats. They became like, people were selling them for thousands of dollars, and the manipulation. And then RuneScape kept trying to update shit so that wouldn't happen. It goes, the rabbit hole goes so much deeper. It's a really great, I'm telling you, go look at the RuneScape history. The economics are wild. Good point. I'm mostly XCI due to slightly higher yield. There's nothing wrong with XCI if you're rich, in my opinion. But about your point, currently 27 and investing only in XQT. Oh, come on, man. You're 27 years old. You've got such a long time horizon. I would focus on growth at 27. There's nothing wrong with XCQT, but forget XCI, man. I would go focus on something that, not financial advice by any metric, but if you're 27, man, like, unless you plan, like, you're not even, something tells me you don't plan on retiring in the next 5 years, do you? Like, I would really go focus on something that was more growth oriented. Try and get some good growth over the next 10 or 20 years because you'll be far better off than owning XCI. XCI to me is a retirement stock. It's great to diversify. It's great to get a higher yield because when you're in retirement and you have millions of dollars, you don't need to worry about the growth, in my opinion, as much as you want stability and income. If that's where you're at in your life and you don't have a job. If you still have a job and you're working in retirement and you don't care about your portfolio, then I even still wouldn't care about XCI. But like my parents, for example, that are in retirement, I love stocks like XCI, some of the real estate stocks, anything that diversifies them and gets them cash flow. Because so long as the returns are reasonable, like who cares about maximizing growth? But yeah, I would be a little cautious. XCQT, I don't think it's garbage. I think, like I said, if you don't want to manage your portfolio, get TC Trust. Okay, let's take a look. I think global market ETFs are great for people that don't want to focus on the markets because then you don't have to worry. You can just, you're cost averaging into everything. It'll auto weight what works and what doesn't. TD Global Technology. Oh yeah, you're a growth guy, aren't you? TD, the Global Technology Leader Index. Yeah, I mean, this is kind of like the Qs, right? It's probably down what? It's only down 21%. What are the Qs down right now? Let's do a comparable. This might be an interesting ETF. QQQs are down what, like 30% right now? Take a look. From peak to trough here, we're down. No, I mean, the Qs are only down about 17%. From peak to trough, they were down about 22%. So QQQs are actually outperforming this slightly if I'm looking at the math here correctly. From peak to trough, yeah, down about 21 points. So, I mean, yeah, QQQs have had a bit of a better recovery so far than this has. But let's take a look. What's in this? Maybe we'll just look on Yahoo Finance. What does this hold? And what are the fees? It's another question because the Qs have like virtually no fees. So you're mostly Apple, NVIDIA, Microsoft. Yeah, I mean, it looks like a replication of the Qs. Can I go in and just take a look at the fees real quick? Let's take a look. Because that's another thing that scares me. You got to be careful with some of these growth ETFs because the actually management fee is not bad at 0.39%. I'd still rather the Qs. The Qs, I think the management fee is like what? Like nothing almost incomparable. At the end of the day, it seems to be a very similar ETF. What are the Qs right now? What are the fees here? Let's see the fund details real quick. Where are the, 0.2%. So not too far off, about 0.2, about double the management fee, give or take. But yeah, they're great growth ETFs. I wouldn't complain too much about either. It might be down. Yeah, you think it'd be up a little bit more too, because the Canadian, maybe it's not. I don't know if there's a currency exchange going on there because they're mostly US stocks. What about at 45? Is XQT still good if you're looking to grow for the next 10 years? Yeah, I mean, yeah, there's nothing wrong with XQT. Like I said, XQT, here's the thing. You got to figure out what your goals are. But at the end of the day, like if you're a novice at this, you got to figure out what your allocation is going to be. So let's say if you're in your 20s, I don't think your allocation should just be like global market ETFs. I think maybe 50%, even 80% should be global market, and then maybe put 20% in growth. I think if you're young, you have to understand you have such a long time ahead of you. You can actualize the growth of robotics and chips and all this stuff by buying a good diversified growth ETF like the Qs. Yeah, they're expensive, but you have fucking 10, 20 years ahead of you to let it actualize the growth and get to that point. But if you're in your 40s or wherever you're at in your life, like if you can't afford that kind of risk, because if you're 45 and you have 10 years ahead of you, it could take 10 years just for the growth to catch up. So you might be a little worried. And you might not want to take the risk because if you're in the dot-com bubble, it took 13 years to recover from the dot-com bubble. You might not have that kind of time ahead of you. So yeah, XQT, probably the more appropriate thing if that's your time horizon. And there's nothing wrong because it globalizes you. It's a one stock fits all size shoe. You can buy that one ETF and call it a day. You don't need to diversify into dividend stocks. You don't have to do shit because you're not retired. It's so much easier. You go to your job, you don't worry about the markets, you just keep buying. Simple. as long as you don't get caught up in the drama. Then you have to deal with the psychological factor, which is why it's never a bad idea to also get a financial advisor if you can't psychologically handle these moments in the market. Elon got screwed when he got together with Trump. Yeah, I agree. I think politics is a good way to ruin friendships, a business. Politics are just dumb. They're divisive. It's horrible. It should just be a personal decision. You look, you weigh your odds, you go vote, you call it a day, you move on with your life. But no, our CEOs like to get politically involved. I mean, could you imagine if Tim Cook did this shit? If Mark Zuckerberg started doing this shit? Whew, baby, it'd be but that's not Tesla, right? Tesla's in its own realm. It is its own realm. Anyways, folks, it's been a long night. I can't get over 100 of you sticking around for the holidays and joining me over the Easter weekend. I am going to stay up late. I'm going to party with the wife, and then I'm going to go get my MRI done, and then find out if I, not to like freak people out, but it's weird because there's a little hole being eaten inside my bone, and the doctor wants to know if it's a tumor or if it's just some kind of weird growth that ate through my bone. Really great doctor, though. I got to give him credit. He's been very thorough. The Canadian healthcare system, man, it's not as bad as people say it is. So yeah, it'll be neat to see what the MRI says, because I got the x-rays back and there's literally a hole in my bone. So basically what they're going to do is they're going to biopsy it. And while they're biopsying it, they're just going to cut that shit out and they're going to fill it with some kind of bone cement. What a weird thing, man. And I was just going to leave it. Like I said, I think the best advice I can give anybody is if it hurts, go to the hospital, because I fractured the end of this and I didn't give a shit. I was like, it's going to heal on its own. It's just a fractured bone. Who cares? It's not that big of a deal. It's just the end of my finger. Ooh, whoop-de-doo, right? No, turns out it could be a tumor. Like, what the fuck? So anyways, thank you, Canadian medical system, for not making me pay for all this work that's being done on my finger. And stay cool, folks. Keep building your communities. Keep investing in your economies. Let's get through this political bullshit and have a happy Easter. Stay cool. Stay awesome, folks. And as always, I look forward to catching you in the next one.